All right. Good morning, everyone. This is our first Shark Talk on a Tuesday in a while. We had to switch it up. I was traveling yesterday, but we're back now. Again, we had some crazy action out of the market last week coming into this week. We had all these, this regional bank news, all these names getting absolutely destroyed. We have this financial watch list and, some of these names, First Republic Bank down, 70% in a week, bouncing back, dramatically. SIVB still halted. We'll see what happens with that. A lot of these names are really getting killed. Again, we'll see what happens in the next few weeks and few months if these names can recover. But it just seems very similar to what we saw with a lot of the energy names during the pandemic, where this sector got crushed the hardest. You had Schlumberger, these names down 80% off highs, and some of them made their way back, but it took 2 years. And that's what we're probably going to see very similar with the regional banks, where there's going to be a lot of these names where they just get taken to the woodshed. They lose 60, 70, 80, 90% of their value in a very short span of time. But it's not going to really be these very fast snapbacks as if nothing happened. It takes a long time to kind of reclaim that confidence. So this is just a space we want to avoid. I see Sheikh jumped in. Sheikh, is there anything you want to talk about before we get started?
He's got to unmute himself first.
Yeah.
Hopefully he's not talking to himself right now.
All right. So let me get over to this. So again, SPY broke that uptrend. We want to see. Oh, Sheikh.
There he is.
You haven't got me out here early. You called me a bitch this morning. Got me real upset.
I called you a diva. All right.
Say what you really mean.
I did. I did.
I can't sit around and give me a SPY.
Yeah,
my whole house is sleeping, so I'll give you my quick little assessment. Can you do a SPY chart?
Yeah, give me 1 second. All right, Jake.
All right. So my take on this is simply put, the number came in line. It's good enough for the Fed to pause next week. Short term, it's short term. It's good enough. So I think we bounce on this reaction, but I think it just leads to a bigger problem. So I think we bounce from these levels, but I think it leads to a bigger sell later on. So I'm anticipating a bounce today, just on the fact that the Fed's going to be able to pause because it came in line. It shows that CPI is kind of stepping lower for now. That number can raise at any time, but a good enough number this morning to elicit the fact that the Fed will not have to, the Fed can take a month, 2 months off. They have a meeting in 8 days, March 22nd. So I'm anticipating a bounce to 400 here. And then I'm going to look to add the shorts from that level. But I think we continue to bounce from here and set up for a bigger short later.
Think we're gonna get that like 50% retracement back to like 394.
Yeah, pretty much. And it's just like I think buyers will get hyped up off, nothing really off the Silicon Valley Bank thing, kind of just like coming and going, and the government intervening so quickly. I think that's pretty good news for the market, in the very, very short term. But I don't think it solves the larger issues that we have underlying. But I think we can look past that, at least to a bounce 400 from here. And then, then I'm going to look to add shorts a little bit.
Cool.
All right. I'm out of here, y'all. I'll talk to you in the chat.
Thanks. See you later.
All right. So moving on, again, Sheikh kind of touched on his outlook with the SPY. Again, I'm very in line with what he's thinking there. Again, we did see this crazy drop in the 10-year in the last week. And as much as, again, a few weeks ago, we were thinking this was going to break out and kind of retest highs. Now that seems to no longer really be the case here. And time will tell whether we H over down through support, should be great for those trying to buy a home, or if it somehow miraculously can continue this breakout, which I'm leaning more towards the rollover back towards, the 3 high 2 area later this year than us being at, 5 or 6. Again, financials is going to be the biggest sector we're going to want to avoid. For the take the money challenge, I'm going to probably gravitate towards some of these regional banks just because the intraday swings are so great. But again, it's just because the account's so small right now, I wouldn't put any real money into those names from a real trading standpoint, because it's just, more of a coin flip than anything. Again, stock wise, there really isn't much. Everything that I was in last week or keeping a close eye on
Oof.
has really gotten smoked. Again, this GL was a great example, not a regional bank, but in the financial space, bought this through 121, got out as it broke through support of that flag through 120, lost, 1%. And it's, 15% lower in a couple of days. So this is, again, these are good reminders of why we religiously want to use these sell stops, because you take your eye off for 1 or 2 days and you get stuck here and you say, I'll let it bounce. And then you get, kind of really stuck in some of these names. So all the names I was really keeping an eye on have all pretty much broken back into support or lower. And there's really not much on my end that is looking that A+ from a risk standpoint that I'm trying to be super eager right now. This is just, let these names wash out, let them kind of settle out and find those setups when the time comes, be it a couple days or next week. But right now it just seems like there's a lot of kind of broken charts, kind of scanning through some of the names we've been looking at the last couple of weeks. There's really nothing that's jumping out to me. But Heaven, again, if there's any members have any top ideas,
Yeah, definitely.
all for it.
We got a couple in here. Let's see. Eric's looking at SPT.
SBT.
SP, P as in Paul. Yeah. Small position through 60. I'm assuming versus kind of like that support area from yesterday.
Yes, we definitely could see this bigger base through 70.
Mm-hmm.
And I definitely see this little support buyback up through 60. He's looking at, it's actually a really big base.
Mm-hmm.
The only tricky part is that you are going to have to give it, that's like the tricky part. When volatility increases, you get these like bigger ranges where he's going to have to buy 60 versus 54. Even back up into this range, you're $10 on 6.
Barely 1.5.
Yeah. So you need this to tighten up.
Yeah.
You almost don't even want to buy. It's like, let this set up for a couple days and find that tighter entry where you can give it, $2 risk. I think it makes a lot of sense. I think chart wise looks great. I just don't think you want to be giving this feeler of an entry $6 to start. But
yeah,
broadly, amazing base. This probably does eventually run back to 140 and retest that in time. Probably would take a year or so, but chart wise looks very good. Just needs to find that tighter risk entry.
Mm-hmm. I got a fire alarm going on. Eric's also looking at Chewy through 40.
I would just wait for 50. I don't really see 40. Yeah, no. I would just give this, wait till 50. This is going to be the real spot for the name for it to break. If we draw a line of 40, you don't really see it as defined of a level where we can kind of see this 50 has been a much more significant spot when you zoom out. So I think just let this develop more.
Yeah, I'm with you there. The support buys work really well on strong uptrending charts, not really the ones that are basing here, because then you kind of just risk being stuck in this chop. So you want to get those support, those little pivots. I could understand that when it's a strong uptrending chart, but when it's basing like this, it's a lot harder to hold it to that higher target price area. Next one, BRKB, Berkshire.
I was reading his annual report, his letter to the shareholders yesterday, and I'll post in the chat. The way that he writes, I feel like it's just very humorous how his letter to the shareholder sounds compared to how he looks. Like it just seemed like a younger person wrote it. But I'll post it so you guys can read it. It's funny. He's like, let's do some math real quick, and he's like, at $1. I'll post it after this. It's entertaining.
Perfect.
Again, the stock is Annual return 20% since inception. Burke B. I'm guessing he's looking at it through what? Through this 308 area versus 300.
306, yeah, 306, past 2 days resistance that it's just kind of rejected twice. So through that area, I'm assuming with a stop under 300. $6 on a $300 name. I don't hate it. It might need a little more time to base down here, kind of like it did almost like end of February, that little consolidation that it did. I feel like it kind of needs to do that, right? So
Yeah.
the thing is, if you're buying it today, you're kind of letting yourself get stuck in this little chop, for the next couple days, and then you finally get that big breakout. So, I think maybe an inside day today or something. We'll see how it sets out the rest of the week, but this looks pretty solid.
Yeah, I definitely agree. When I was in college, before they split this, I had one share. It was $3,000 a share, and they did a 70-for-1 split. So they did not know much about stock splits. So overnight, I thought I had 70 shares at $3,000 a share and thought that I made $200,000 overnight. I was like, this is why the stock market exists. Go to work, was going to quit. And then the next morning I woke up and my account adjusted. So I still had the 3,000, did not have the 210 and felt like an idiot. But that was more than, what was it, 10 years ago when they split it. But yeah, anyways.
Amazing.
What are we looking at next?
Next one, Kyle's looking at FISV. Defending that previous trend line, wants to buy 106 versus
What was it?
104.
FI.
FISV,
Oh,
Fiserv. I am
hard pass.
yeah, that's a hard pass, at least until we actually, I don't see how it's defending any sort of trend line. It closed at lows, sold off really hard. There's no, it
Yeah.
hasn't defended anything yet. So you got to give this one at least a little bit of time to
Not
show
even,
us some
yeah.
sort of reversal. You know.
Regional bank. This is you don't want to be in this space right now. You're not trying to find the strongest name in the most hated sector. Hard pass. Buy this through 120. Don't try to chase it on the way down.
Yeah. Let's see. I think that's pretty much it. One of the names that I had on my watch list from last week from a nice earnings reaction was this Duolingo. DUOL. So it finally broke out of this weekly base through this like 110 area and is holding fairly well. I mean, in comparison to what the market's been doing over the last week or two, selling off pretty hard. This kind of just gave a pullback, and then yesterday gave us a nice bounce. Not necessarily buying this one today, but I would love to continue to see this, this flag start to form here and then look for the next leg up in time. Looks pretty solid. And then the other one I was looking at was this FOUR, FOUR, which also sort of broke out of a little weekly base that I had around 67. Pulled back into that 67 area, sort of shaking it out a little bit. So I could see some potential there, maybe through 69, but the risk is still a little wide. Like you were saying, with all these names that kind of had a volatile Friday, kind of makes those support buys a little bit tough because the range is so wide. But just keep an eye on that one. And yeah, it's pretty much what I got on my list.
Yeah, I think just overall theme right now, just give the market a couple of days to kind of settle out and digest, the CPI number. We have the big thing really just as regional bank. This is the first time I'm really getting a lot of those texts or more texts than normal about a topic in finance. And right now it's like, is my money safe in the bank? Yes, your money's safe in the bank. But when people start to think that, they start to make, typically irrational or emotional decisions. So people are a little nervous, very skittish. This isn't like a very risk-on environment, broadly speaking. So I think just being patient and waiting for those setups. Even last week, we kind of saw like a silver lining of this, where I saw a lot of members talking about like they're, being a little frustrated with their trades, myself included. Pretty much most of the trades I put on last week did not work. Granted, most were smaller losses, but still annoying that there wasn't much follow through. And now we're kind of seeing why that wasn't the case, because as the market's pulling in, can't expect stocks to break out. So we need to just be patient. And, we've seen stuff like this before. It's just a new, different, scary headline. Now it's these regional banks getting blown up, or these bank runs on them. And it's just a new, scary headline. But in a week or two or a month, it'll be old news. So just got to wait it out a little bit.
Sounds like a plan.
All right, guys.
Yep.
All right. We'll see you in the chat.
See ya.